The stock market, a place where fortunes are made and lost. But what if I told you there's a way to navigate it like the pros? A way to potentially grow your wealth, beat inflation, and achieve your financial goals. That's what we're diving into today. We're going to unlock the secrets of the stock market, break down complicated jargon into easy-to-understand concepts, and give you the tools you need to start investing with confidence. Whether you're starting with $100 or $100,000, the principles are the same. This isn't about getting rich quick. It's about making your money work harder for you over the long term. So buckle up, hit that subscribe button, and let's get started. Imagine a giant online marketplace, but instead of buying shoes or electronics, you're buying pieces of companies. That's essentially what the stock market is. Companies like Apple, Tesla, or even your local coffee shop can issue stock, which represents ownership in their business. When you buy a share of stock, you're becoming a part owner, even if it's a tiny fraction of the company. And just like any other marketplace, the prices of these stocks go up and down based on supply and demand. Think about it like this. If a company is doing well, innovating and making profits, more people will want to buy their stock, driving the price up. On the other hand, if a company is struggling, its stock price might drop. But here's the thing. You don't need to be a Wall Street hotshot to understand this. In fact, some of the most successful investors in the world, like Warren Buffett, focus on understanding the businesses behind the stocks, not just the stock prices themselves. The stock market can seem intimidating at first, but once you understand the basics, it's like unlocking a whole new world of financial possibilities. So stick with me and we'll break it all down together step by step. Now let's talk about the exciting part. How do people actually make money in the stock market? There are two main ways: capital appreciation and dividends. Capital appreciation is simply the increase in the value of your stock over time. Let's say you buy a share of company XYZ for $50, and over a year the company performs well, and its stock price rises to $75. You've just made a $25 profit per share. Of course, it works both ways. If the stock price goes down, you could lose money. That's why it's crucial to do your research and invest in companies you believe in for the long haul. The second way to make money is through dividends. Some companies share a portion of their profits with their shareholders in the form of dividends, which are like regular payments. Think of it as getting paid just for owning a piece of the company. Dividends can provide a steady stream of passive income, which can be especially attractive to long-term investors. Remember, investing in the stock market isn't a get-rich-quick scheme. It's about participating in the growth of companies you believe in and potentially reaping the rewards over time. Not all stocks are created equal. Just like there are different types of cars, there are different types of stocks, each with its own level of risk and potential reward. Let's start with large-cap stocks. These are the big players, well-established companies with a long track record, like Apple, Microsoft, or Johnson & Johnson. They're generally considered less risky than smaller companies but might offer slower growth. Then you have mid-cap stocks, which are companies in the middle ground. Not too big, not too small. They have the potential for more growth than large-cap stocks, but might also carry more risk. Small-cap stocks are the new kids on the block, smaller companies with a lot of potential for growth. They can be more volatile, but if you pick the right ones, the returns can be significant. And finally, we have international stocks, which are companies based outside of your home country. Investing in international stocks can help diversify your portfolio and tap into different growth opportunities around the world. The key takeaway here is to diversify your investments. Don't put all your eggs in one basket. Instead, spread your investments across different types of stocks to manage your risk. The secret to picking winning stocks. Now this is the million-dollar question, right? How do you pick stocks that have the potential to go up? Well, here's the secret. There's no magic formula, but there are proven strategies that can significantly increase your chances of success. The first rule of investing is, don't invest in something you don't understand. Take the time to research companies thoroughly. Understand their business model, their financials, their competitive landscape. Look for companies with a strong track record of growth, a solid management team, and a competitive advantage in their industry. Think about it. Would you invest in a restaurant without looking at the menu, the reviews, or the chef's experience? Another crucial aspect is to think long-term. Don't get caught up in the hype or short-term market fluctuations. The real wealth in the stock market is built by holding on to great companies for years, even decades. Remember, investing isn't gambling. It's about becoming a part owner of businesses you believe in and letting your money grow alongside their success. The power of compound interest in stock market investing. Imagine a snowball rolling down a hill. As it rolls, it picks up more snow, growing bigger and bigger. That's compound interest in action. In investing, it means earning interest on your initial investment and on the accumulated interest from previous periods. In simpler terms, your money starts making money, and then that money starts making money, and so on. It's like a financial snowball effect that can lead to exponential growth over time. Let's say you invest $10,000 and earn an average annual return of 7%. After just 10 years, your investment would grow to over $19,000. But after 30 years, it would balloon to over $76,000. That's the power of compounding. The earlier you start investing, the more time your money has to compound and grow. Even if you can only invest a small amount each month, starting early can make a significant difference in the long run. Remember, time is your greatest asset when it comes to investing. Don't underestimate the power of compound interest to transform your financial future. Common mistakes that can cost you money. Even the smartest investors make mistakes, but learning from them is crucial for long-term success. Here are some common pitfalls to avoid. First, don't invest based on emotions. Fear and greed can lead to impulsive decisions that can hurt your portfolio. Stick to your investment plan and don't let market swings dictate your actions. Second, avoid trying to time the market. It's impossible to consistently predict when the market will go up or down. Instead, focus on finding great companies and investing consistently over time. Third, don't chase hot stocks or follow the crowd blindly. Just because everyone is talking about a particular stock doesn't mean it's a good investment. Do your own research and make informed decisions. Fourth, be patient. Investing is a marathon, not a sprint. Don't expect to get rich quick. It takes time, discipline, and a long-term perspective to build wealth in the stock market. Remember, investing isn't about getting every decision right. It's about making more good decisions than bad ones over time. How to get started in the stock market today. Ready to take the plunge? Getting started in the stock market is easier than you might think. Here's a step-by-step guide to set you on the right path. First, determine your risk tolerance and investment goals. How much risk are you comfortable taking? Are you investing for retirement, a down payment on a house, or your kids' education? Next, choose a brokerage account. There are many online brokers available, each with its own fee structure and features. Do your research and find one that aligns with your needs. Once you have a brokerage account, you can start investing in stocks, ETFs, or mutual funds. ETFs and mutual funds are like baskets of stocks that allow you to diversify your investments easily. It's also crucial to educate yourself continuously. Read books, watch videos, and stay informed about market trends and investment strategies. The more you learn, the more confident you'll become as an investor. Remember, investing is a journey, not a destination. Start small, be patient, and don't be afraid to ask for help along the way. Start investing today and unlock your financial future. We've covered a lot of ground today, but the most important takeaway is this. The stock market is accessible to everyone, not just Wall Street experts. With the right knowledge and a long-term perspective, you can potentially build wealth, achieve your financial goals, and secure your future. Remember, investing isn't about getting rich quick. It's about making your money work harder for you over time. It's about taking control of your financial destiny and creating a brighter future for yourself and your loved ones. Now it's your turn. What steps are you going to take today to start your investing journey? Let me know in the comments below. Congratulations! Look, I get it. The stock market can seem like this big, scary thing, but it doesn't have to be. It's really just about owning little pieces of businesses you believe in. And the best part, you don't need to be a millionaire to get started. Remember, even if you can only invest a small amount each month, the power of compound interest will work its magic over time. The most important thing is to just start. Thanks for watching. If you found this video helpful, hit that like button and subscribe for more personal finance and investing tips. And be sure to check out next week's video, where we'll dive deeper into specific investment strategies.